Global stock markets are in meltdown right now, with billions wiped off the ASX in a single day, Wall Street in a free fall.
Yeah, it marks the biggest market drop in 2 years. And to break down what this actually means for you, we're joined by Bouris, Executive Chairman of Yellow Brick Road Home Loans. Mr. Bouris, good to see you. Look, what has sparked this crash? And if you're not an investor, what is this going to mean for you?
Well, what has sparked the crash are fears that inflation and the control of inflation, in other words, putting interest rates up, keep jacking them up to keep inflation down, will create a recession. So that big recession word is starting to creep up all around the world, including right here in Australia.
Are we putting the rates up to stop recession? See, I get confused.
It's totally counterintuitive.
Yeah, right.
And equally, it's also counterintuitive that the people who probably spend the least amount of money to protect their mortgage are the people who are going to be the most affected, that is mortgage holders, because they're going to put their interest rates up. So, yes, we're worried about cost of living. Yes, we're worried about interest rates going up. But at the same time, we've got to control inflation. So it's really what they're saying is you have to take a lot of pain. And if you go back many, many years ago, Paul Keating referred to this as the recession we had to have to control inflation. And if Paul Keating was still the Treasurer or maybe the Prime Minister today, he would say the same thing. This is a recession we have to have in a technical sense.
Well, when the Reserve Bank Governor is talking about 7% inflation, as he did last night, you've got to think something's got to give. What is this going to mean for people's superannuation?
Well, people in superannuation, don't panic. That's what it means. The first thing is the superannuation, to the extent that they've invested in shares or the manager of their fund has invested in shares, they're going to see their superannuation fund value decrease during this period. But one thing that is 100% for sure that I've seen on a number of occasions through GFCs, through the COVID, and previous periods to that, is that these things last for about 6 months or 12 months. And then the markets bounce back at an even greater rate to what they were before. So we remember during the GFC, everybody's superannuation fund imploded, everybody panicked, some people started cashing out. Then within a year, 18 months, that stock market picked up, as did the property market.
So it really is about patience. It's a waiting game, is it? Whenever something like this, a crisis like this happens in the world, if you can hold out, if you do have shares or whatever you're super in the market, it's about patience.
Well, the very people who get affected by this are the ones, one, who aren't well advised, or are those people who've been speculating. The people who've been speculating in property and speculating in shares, we're going to get caught with their pants down, big time.
How bad is this going to get?
I think it's going to get a lot worse before it gets better. So I would expect over the next 6 months we're going to see a lot of hurt. The Reserve Bank Governor said yesterday in an unusual interview, he said he expects inflation to get to a 7%. He was only saying 6% 1 month ago. He's now saying 7%. He's also sort of steered us in the direction that he expects the official interest rate to go up to 2.5%. In other words, 1.5% more increases, 3 more 50 basis point increases. So that's a big deal. That means interest rates to the retail borrower will be around about 4.5%, 5%.
If we are headed for a recession, as you mentioned, where are we going to feel that the worst?
Well, the retailers are going to feel it for sure. Small business owners are going to really feel it big time. Probably you will see the unemployment numbers start to kick up. But Sylvia and David, I don't think we're going to see a recession. Okay. This is just jawboning. This is because our Reserve Bank won't let that happen. They're not going to put interest rates up and put us in a recession. If recession looks like it's imminent, Reserve Bank will they'll stop, or they'll put rates down.
Right.
There are a lot of delicate levers to be
100%.
pulled at the moment. Thank you very much, Mark.
Thanks, Mark. Good to see you.